Okay, good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you guys today to take you through the markets. So I hope everyone is doing fine. Comment in the comment section down there how trading has been for you for the week so far. Of course, now we're about 3 days into the new trading week, so we're already getting some nice movements in the markets. So looking at the market so far this morning, of course, we've gotten some data out from the UK. We have UK inflation, of course, also still on that disinflationary trend, which of course is the typical trend we've been seeing for inflation, I would say. We are also seeing a bit of buying coming in for some metals like gold and silver. Silver has been having a bit of a hard time to break above $32. But soon enough, we should see silver possibly breaking this deadlock here of 32 to possibly trade as high as $33. Now, looking back to see how the markets are looking like, generally we are seeing a bit of buying coming in for gold. We're seeing some buying coming in for silver. We are also seeing a bit of choppiness for oil, but of course, oil seems to have resumed its downtrend. And of course, we saw crude oil hitting as high as $77 in the heat of the Israel and Iran crisis. Now, of course, with oil reaching as high as $77 and coming back down to $70, with a de-escalation of tensions between Iran and Israel, it's highly likely that we should see gold trading below $70, possibly towards those areas of $65, $66. Looking at the rest of the market, we have seen GBP/USD has had a sharp drop there, moving below 1.30 on the weaker inflation. Euro USD is also looking relatively bearish, and of course, the reason for that is the expected rate cut that is coming in on Thursday. So, any hopes of buying for these risk-on currencies has not yet materialized, and we should most likely see some deep buying coming in towards the end of November, going into the new year. Now, going into looking at the rest of the pairs, USDJPY, we shall look at it in detail to see where we can expect it to move towards to. It's now having a barrier of about 150 yen, and we have to wait and see what happens from that barrier of 150 yen to possibly trade higher to 151. Now, looking at USDCHF has not given us a lot of decisive movements, I would say, since last week. It has stayed in a bit of a choppy range, but still looking relatively bullish on the back of a stronger DXY. USD CAD, of course, collapsed yesterday from as high as 1.38. It looks like it might make one more attempt to possibly trade up to 138. However, for now, it's still there below 1.38, and we have to keep seeing what will happen. Now, we shall also go on the charts to see how USD CAD did sometime last in the last election cycle, and we shall be able to get some findings from that. Now, looking at the indices, indices are looking a bit choppy. We saw a very sharp sell yesterday during the US session on a NASDAQ. Netflix earnings are coming up ahead tomorrow. And of course, we shall go over the Netflix chart for you to see how Netflix is doing. There are a few uncertainties that might emerge for the indices, which might make trading a little bit tricky for them, especially since we are in a new period where we have the US elections a few weeks from now. But in addition to that, we also have earnings. So earnings are going to be released for various companies. For those of you that trade indices, I'm sure you must have seen how the Dow Jones was trading upwards of 43,000 actually, and that sharp move to the upside was majorly on the back of strong earnings from some of the big banks like JP Morgan. It had a bit on earnings, was up about 4% on Friday. We also had Wells Fargo beating earnings, was also up roughly almost 5%, and that is one of the reasons that has propelled the Dow Jones to those new highs. So we shall be looking at the indices to see how what happens over there. Apple advanced yesterday, closing up about 1.2%. Tesla was a bit down. Tesla has been undergoing a bit of pressure. Some people have indicated, and of course, a few articles I've read online were saying that the announcements that were made by Elon Musk seem to be a bit are not convincing enough for the investors. The robots which he also released, the Tesla Optimus bots, he said that actually people were saying that they were actually controlled. They were actually controlled by human beings. So which means that price tag of $20,000 per robot seems to be a bit unfair, and we wait to see whether he can possibly prove critics wrong on that. Now, looking at the calendar for today, I would say, of course, we've had a very sharp sell for GBP/USD. That is after we have gotten that weak GDP that came out, earlier today. And of course, looking at GBP/JPY also had a sharp drop on the back of that weak CPI coming out from the UK. And for now, the pound is looking extremely fragile on the back of that weak inflation. It could possibly recover a little later, but there's a lot of weakness that could stay for it, and we should see more selling coming in there for the pound. Now, of course, today we also have ECB's President Lagarde, who's going to be speaking at 9:40 p.m. But we shall be waiting again for tomorrow. Tomorrow we will be with Rufus, and you'll be able to go through the ECB interest rate decision, where a 25 basis point rate cut is expected that could possibly see the euro selling towards 1.07. Now, for those of you that are swing trading, I'm sure that's a good thing, especially since ideally, eventually, what we are expecting that we are going to see the euro getting relatively stronger. But for now, there seems to be a bit of weakness there for the euro that could possibly see it trading lower. Now, before I go to the MT5, I just want to go through USDJPY. Okay, so for some of us that are trading USDJPY, I just want us to go through the tail of events that have been affecting this pair up to where we are right now. Okay, so to start it off, we got the announcement. There was an announcement that the Bank of Japan was going to hike rates for the very first time in over 20 years. Okay, soon after we got that announcement from the Bank of Japan, what happened next? We saw Bank of Japan raising interest rates to 0.25%. And of course, they did this around the 31st of July. So what followed with that was a very sharp drop for the pound, rather very sharp drop for the dollar against the yen. So the yen essentially got stronger from that interest rate hike that we got, and we actually saw the yen strengthening all the way up to it strengthened all the way up to 140. Okay, so if you recall, around this time when we got this announcement for Bank of Japan, essentially what happened from there was that there was a lot of market turmoil. We saw a lot of selling that came in, especially for the indices, for the stocks. Most of them underwent a lot of selling, and so the Bank of Japan then announced, and that the Bank of Japan deputy governor came in and said that they are unlikely to hike rates. Okay, so now when they mentioned that, the yen became weaker, and we started seeing it recover. So it recovered not from exactly here, but it recovered from around 139, and we saw a very sharp recovery that took the yen all the way up to 150 USDJPY. Now, the Bank of Japan then came in later and announced, and they said that they are not ending their rate hike cycle. So after mentioning this, what happened? The yen now immediately lost value and now came all the way here. Okay. Now, this rally which we had for USDJPY from exactly 16th of September was, I would say, a bit of a relief rally that came in for the DXY. So the DXY rallied around this time. Okay, but the rally intensified after the NFP data that we got for the month of October, for the month of September rather. So if you guys recall, that NFP data was quite strong because we got a number of 254K. Now, soon after we got that number, USDJPY began rallying. Okay, and it was rallying along with a relatively stronger dollar index. And where we are at the moment, the very recent fundamental news we have is that the Bank of Japan policymakers have now reiterated that they want to move slowly with rate hikes. Okay, now looking at where USDJPY is at the moment, it seems like it wants to aim for 150. Take note that from the latest swing low we've gotten of 139, the structure for USDJPY is quite bullish. Okay. However, I would still maintain us having a bearish structure looking at where we came from 160. So from 160, the yen is looking relatively bearish, and it's very likely that we get much more weakness going into the future. But for now, I want to keep an eye at 150, which is our uh, uh, the next level of structure for us to break. We are currently along this level of structure that's going to be quite easy for us, around that level of 149, ranging 149. I would say 114, 149.356, around 149.400. So around there is where we are aiming for. But if indeed, based on what the Bank of Japan has mentioned, and this is the most recent fundamental development we have, they are saying that they are going to go slowly with hiking the rates. Now, if it's anything to go by, it means that USDJPY could rally. Now, the other thing I just need to mention is, especially for people that are doing any swing trading, or if you're trading USDJPY, take note that the Bank of Japan is going to be meeting on the 31st of October. Okay, so the 31st of October, we can expect some bit of direction for this pair, and I'm talking about something more prolonged direction for it. So most likely, if Bank of Japan does not hike rates in this meeting of October, we are going to see USDJPY advancing in a channel that could take it upwards of possibly 153 or 152. Okay, so that's how far up it could likely go. Okay, but if indeed we get a rate hike from Bank of Japan, then I believe from here we could see failure to break this structure here, and of course we could see it possibly continuing in that downtrend channel to come and trade close at 142. So for now, it's just a wait and see. And of course, I'll definitely be letting you guys know when we get any more developments there. Now, let's quickly go to the DXY and see where the DXY is trading at the moment. Now, if you look at the DXY, of course, it was having a bit of hesitation at that level of structure of 103, which of course it managed to break. And we are now looking ahead to the US election, which is around the 5th. It's going to be around the 5th of November, somewhere around here. At the moment, what I can say regarding the US election is that there seems to be a bit of heated competition between Kamala Harris and Donald Trump. For some of us that may think that the result is very certain, especially if you're following social media has painted a picture that Donald Trump is most likely going to emerge as the winning candidate. But I can tell you for certain that we are not yet sure what's going to happen. So it's anyone's election right now. It could be Harris win, or it could be a Donald Trump win. We need to just wait and see what happens. Now, that DXY has been looking very, very strongly bullish. Okay. One of the reasons why we are seeing a strong dollar right now is because of the recent data we've been getting for the dollar. If you look at the recent data, we've been having very strong NFP readings. The NFP reading we got for September was very strong. The one we got for August was also strong. So things are looking quite rather, the one we got for September was strong, ADP was strong, and now the dollar seems to be launching some bit of a very nice move to the upside. Now, at the moment, the other reason why we are having a strong dollar is because the Federal Reserve has indicated that they are not going to move too quickly with rate cuts. And the most recent Fed speak we got, he said that further modest rate cuts appear appropriate in the future. Okay. So here they are indicating that they might not rush too quickly to cut rates. So they are going to move slowly. That's why the dollar is now starting to move higher in anticipation of limited rate cuts. Now, the next time we have the FOMC is going to be in November. And what is going to change the direction for the dollar, okay? For the dollar to reverse back to its bearish structure that we previously had, okay, from around July, for us to now reverse possibly from here to trade lower, it's majorly going to be what's going to happen with the Federal Reserve. So we ideally need to see we need to see the Federal Reserve most likely cutting rates for us to see the dollar moving lower. Okay. Now, the other thing, of course, to take note is especially going into the election, dollar tends to typically benefit from upsides, since traders at times and investors are a bit skeptical of what could happen during the election. So I think that is also causing us to see a strong dollar. Now, for those of you that are trading gold, take note, guys, that gold and the dollar are rallying concurrently. Okay. I know some of you might ask, I know you haven't asked yet, but some of you are going to wonder, why is dollar buying? Gold is also why is dollar buying? Gold is buying. It happens. Okay. It happens. So just take note of that. Don't get surprised. Okay. So I think that's what we have for now. And maybe we can just briefly go through this article here, which we have from the Nasdaq, and then we can cross over to the MT5. So for now, since we are going into the election cycle, but we are also in the earning season, a number of reasons or a number of companies are now talking about how they are going to integrate AI within their products. We have also been seeing Nvidia. Nvidia has been rallying, and at the moment, Nvidia has said they are going to launch their new AI product, which is the Blackwell. So right now, there's a lot of psych and buzz around this AI thing, and that's what is supporting the Nasdaq. So Nasdaq is quite bullish, and the only reasons why we might get a bit of instability with Nasdaq, where it could sell or buy or sell or buy in the short term, is likely due to the earnings that we are getting. But for now, I would want to stay bullish on the Nasdaq. So just to go briefly through this, I just want us to see what the latest commentary is from the Bank of Japan. So Bank of Japan must raise interest rates at a very moderate pace and avoid hiking prematurely. Okay. So this particular comment that we got from the Bank of Japan, that particular one of that they want to hike rates slowly, that is actually what is causing us to see a stronger USDJPY. Okay. So if you are USDJPY seller, take note of that. Be very careful, because the market is actually skewed towards a buy. All right. Now let's cross over to the MT5, guys, and see what else is on the chart. If you have any questions, kindly drop them in the Q&A, and I'll be able to come to them later. Okay. So I believe we shall start with Bitcoin. So for Bitcoin, for some of you that might or might not be trading BTC, we're having a bit of bullish momentum for this particular asset, BTC USD. BTC USD is tradable on FXpesa's platform. You can trade it on the Premier account with a minimum deposit of $100. If you don't have an FXpesa account, check in the description below. You're going to be able to get a link where you can open up a free FXpesa account. It's free. There are no opening charges for the account. So you open up the account so that you can be able to access BTC USD. So for BTC USD, we are currently seeing a bit of momentum within this box right here. It's been having a struggle breaking 670,000. We've been seeing it bouncing below it, moving back down, bouncing below. But at the moment, I would say I'm expecting Bitcoin to possibly have a break of structure to trade towards 69,000, possibly even moving as high as 71,000. Now, I know there's not much that could possibly make Bitcoin sell. The ETF inflows have also been supporting us seeing a relatively stable Bitcoin price. The inflows have been stable, and we're also seeing a lot of institutional interest on this particular asset. So I think for now we could look for some buys on BTC USD, swing buys with stop losses below that level of 57,000. It's very likely that we see some more buying momentum there for this pair. Now, crossing over to US 30, US 30 very nicely broke above our level of structure there. We had a grab on liquidity, of course, and of course, after that grab on liquidity to the downside, we had a very strong imbalance candle, and it's at this area here that I'm very interested for us to see what happens next. Now, the Dow Jones is having a bit of a struggle. We had a few dodgy candles there. That's the reason why we saw that selling happening at around 43,000. For now, it's really just a wait and see for the Dow Jones. I want to see what happens within this area here. If we fail to hold structure here, then it means that the next area for us to move for the Dow Jones could possibly be towards this, back into this box here of 43,000, possibly 42,400. So for now, I'm really just waiting to see what happens for this particular asset, and we just have to keep an eye to see what happens there. Now, looking at the Nasdaq. Nasdaq had a very nice move to the upside. I was expecting it to have a strong rally towards 21,000, but the rally is not moving in a straight line for obvious reasons, of course. We have some companies releasing earnings, and as you know, earnings do not come out all rosy. Tomorrow we have earnings for Netflix. Netflix is expected uh, to indicate that their subscribers slowed down for the month of for the previous quarter, and of course, I'm sure some of us are culprits regarding that because we share passwords. I'm a culprit myself. I share my Netflix password with my family members, so you find it's tricky again for Netflix to combat this, and that's why they are not getting. The ideal thing is that you don't share a password for them to access your Netflix, but everyone pays for their own Netflix. So they want everyone to pay for their own Netflix. Now, to do that is a struggle, and I believe that's why they are not hitting their revenue targets. So Nasdaq is going to have a bit of a hard time maintaining or moving closer to 21,000. Now, I know it's going to have a bit of pullbacks here and there, but closer to November, we should see a potential move to the Nasdaq towards 21,000, and any pullback is a buying opportunity. So you could set your buy limits for the Nasdaq below 20,000. Those are the good levels for you to buy, and aim for 21,600. Okay, that's the best way to approach the Nasdaq. There might be some pullbacks below that 200-day moving average. At the moment, I think my computer is stuck. Yeah, there might be some pullbacks below our 200-day moving average. If we do get any pullbacks here, those are good chances or good entries for you to look for buys towards 20,600. Now, crossing over to gold, gold, of course, obviously has been it's been on quite of a run. We have again our demand zone here holding very nicely for gold, where we indicated, I think, when we met last time that we are going to look for some buys on gold. The demand zone held very nicely, and gold is now trading closer to its previous high of 26,800. Now, if we break 2,680, gold is going to aim for 2,700. The reason why gold is trading with a very strong upside momentum is purely because of the expected rate cuts that are coming from the Federal Reserve, that is next month, but also the uncertainty around the US elections. So I believe gold's momentum could possibly see it moving towards those areas of 2,700. So just keep an eye there to see how you can aim for gold. Now, take note, gold has very strong demand zones. You can see the kind of upside momentum we have there for gold. During this market snapshot with FX Pesa, we've been calling more gold buys than sells for obvious reasons. We are on a strong uptrend. Gold is on a strong uptrend. You can see it quite clearly there. It has more buying momentum than selling momentum. Okay, so we should expect more upside as we go into as we go into the next few days. Now, GBPUSD. Let's have a look at GBPUSD here. So GBPUSD right now broken through our demand zone there, and we can expect it's likely that we are going to see more. We could see more momentum there as we go into the session. For now, the reason why we actually had a break below that demand zone is majorly due to what I would say is the CPI data we got recently. So we had very, very weak CPI data, But you can clearly see, despite the CPI data, GBPUSD is holding its demand very nicely. You can already see that rejection, the rejection it's gotten along those areas there, just around that level there of 1.29850. Yeah. Now, for me, I'm quite bullish on the pound. Despite us having weak inflation data, I'm bullish on the pound. That disinflationary trend we've been seeing for a number of countries, even in Uganda, even in Kenya, we've been having disinflation, has not really affected the currencies a lot. Now, take note that if the inflation does not increase too much and does not decrease too much, okay, if it's just a stable and slight decrease, it's good for the currency. That's why you'll notice that the pound, despite us having weaker inflation, we've seen the pound rallying from over 1.23 to as high as 1.34. So what do I think we should do for the pound? I suspect the pound will recover from this area here. So we should aim to buy the pound and possibly aim for these levels up here. If you're a swing trader, if you're a day trader, you could possibly look for a potential buy there and set your stop loss slightly below that 50% fib level, which is around 1.29710. But you should see price action holding there for a reversal to trade back higher. Now, looking at Euro USD again, just like we said on Friday, we are in a declining trend, as you can see. And going into the ECB conference tomorrow, I do not expect this to change. It's very likely that the declining trend will continue. We also had a golden cross. We had a golden cross there for. We had a golden cross there, rather a death cross, which was a sign of selling momentum. That's where we should have gotten into a sell for this pair. Going into the ECB, of course, you're going to be with Rufus tomorrow. But what I can say is that it's likely that we might get a rate cut from the ECB, which could weaken the euro. But I'm expecting us to bounce off this ascending trend line here. So possibly a small bounce into that imbalance candle there for the NFP for July, and after that, then we should possibly see a move back to those areas there. So that's what I can expect from tomorrow's ECB. Uh, we're just going to get a slight pullback before we see the market trading higher. So I'm more bearish on the dollar than bearish on the euro. So I'm not expecting us to see too much selling there. All right. So I think that's it from my end. USD card is in a choppy. We had said USD card we should be looking for buys. We had a golden cross, very nice, continued higher. We are now in a range there for USD card. For now, we have to wait and see what happens here. It could be a slight pause before a continuation, but it could also be that USD card has stopped for now and could possibly start its downtrend. So one of the two is very possible. Either we break structure to trade below, or we are going to continue break structure to trade higher. So one of the two will happen. We have to wait for the break. Right now, it's ranging. All right. That's it from me, guys. If you have any questions, now might be the time to send in your questions. As you're sending in your questions, okay. As you're sending in your questions, guys, I just want to tell you about the Trading Titan Summit. So for those of you that that are located in Tanzania or Kenya, take note, guys. We have something interesting for you. If for more information, you can check FX Twitter page. However, we have November. Do not miss it, guys. It's going to be amazing. You have a number of people that are going to be there. We have Joe Carpenter from Equity Trading. We have Prudence Maximilian, who is, of course, the EP for TZ. And then I do not want you to miss, most importantly, Bud Skompiski. I'm sure most of you know about him. He's one of the top traders globally, listed also on FTMO. Make sure you do not miss out, guys. Make sure you attend that event in Dar es Salaam, to be at the convention center in Dar es Salaam. Now, again, for my brothers and sisters in Nairobi, you have the trading masterclass, which is going to be happening at the Sarit Expo Center. I think I know Sarit. It's an amazing place. So make sure you don't miss out on it. It's going to be happening on the 24th of October. Trading masterclass. You'll be there with Robert and of course Rufus. So please make sure you don't miss out on that one. Now we have the US elections that are going to be taking place on the 5th of October, guys. The US election, the US is the biggest economy in the world, guys, and the US election is going to have a very big impact on a lot of things. So we are going to have a special Twitter space for you. It's going to be happening on FX Spaces Twitter on the 29th of October. Stay tuned on FX Spaces socials for more information. We're going to have a lot of speakers that are going to be there for that space. So I don't want you guys to miss out on that space. Okay, awesome. Yeah, so please register. There's more information in the description below. So you just check in the description below and you'll be able to get the link to register for the Trading Titans event as well as the Trading Masterclass event. All right, so questions. What's the most promising pair today? For me, I think the most promising pair would be gold. I'll be looking for some buys on gold. I'm expecting gold to possibly break towards 2,680. We might get a bit of a rejection somewhere here before gold starts retracing, but for now, I'll be looking for a buy on gold today. Next question. Yeah, so for gold, just like I've indicated, Larry, we've had a very nice a break above that asymmetrical triangle. So we should see gold continuing that uptrend from 2,660. It's moving towards the previous high, which of course is 2,685. So I think that uptrend should continue for gold towards 2,690. All right, next question. I heard you say that you anticipate the euro to rise against the dollar in near future. I beg to disagree. The eurozone is struggling. Inflation is in its biggest economies. Germany and France has fallen below the ECB target. Unlike the Fed, not only is the labor market worsening, but also their economy is in a mild recession. The ECB having an aggressive cutting cycle compared to the Fed, hence looking to a weak euro. Again, I also beg to disagree with you. I don't think quite. Take note that the Federal Reserve, yes, it's true that there could be a technical recession taking place in Germany and France, but that might not in any way affect the currency much. We have to put a big difference between data and reality. That's the problem with the market. The market at times makes you rethink your data. It makes you rethink a lot of things. So yes, there might be a technical recession, but it's unlikely that we see that reflecting in the price of the two currencies. Now, the other thing, of course, is by the ECB to tame a slow economy. We'll definitely see that we'll definitely see that happening with the currency, with it getting stronger. Now, of course, between now and December, it's quite uncertain what happens. With the two currencies. Typically, during election cycles like the one we are in, the dollar tends to recover because investors cut back on high risk investments or close to moderate risk investments and move that money to safe haven places like money market instruments or money market assets, and that is actually what is strengthening the dollar right now. So it's making some traders believe that the dollar is strengthening because of the euro weakness or the recession or whatever is going on with the US, with the UK, with the eurozone economy. It's not that. So there are many factors at play. One of them, of course, like I said, the textbook knowledge is that a technical recession should lead to a weak currency. But take note that there are also other factors at play, like there being some inherent strength for the dollar because of transfer of money to the money market assets, which of course increases the value of the dollar. Yeah. The other thing, of course, that's also making us believe that the euro is weak is that a number of Fed speakers have reiterated that they want to move a bit slowly with the rate hikes. So that is also allowing the euro to weaken against the dollar. So we have to weigh in these different options and see what could be the stronger factor that could ideally be playing a part in the weakness of the euro. Yeah. All right. Next question. Yeah, you Joseph, you're asking about Netflix. Yeah, so I had the Netflix chart, but I ideally do not know what happened to it. I had it open somewhere. I just can't find it. But based on the forecast is that we get a weakness in the subscriber growth for Netflix, and of course that is due to the issue that I told you about the Netflix password sharing. So Netflix has been trying to curb that password sharing thing, but it's quite hard for them to do it because people keep sharing passwords. The ideal scenario is that if you have a family and you have a family of about 3-4 people, you ideally should be how Netflix planned it is that if I have a Netflix account, I'm supposed to be sharing the password with the people I stay with, so people within my household. But now we have a situation where um, you're sharing the password with people that are not in your household. So that is now the issue that Netflix is trying to combat. They want to see that they can have as many people subscribing as possible, which can help with their revenue growth. So that is likely going to affect Netflix's the subscriber growth, which of course is the main contributor to its bottom line, the subscriber growth. The more subscribers it has, the more revenue it makes. Then of course, if they try to cut back on their costs, it means the more profit that the company can make. So that is going to be the main thing. If Netflix bids on subscribers, indicates that it's going to try and tame people sharing passwords to watch Netflix, then I think we should see the stock gapping higher. Yeah. So tomorrow Netflix is reporting earnings after hours. So for now, I think Nasdaq is going to stay choppy. You'll be able to see my chart in a moment. We had a sharp drop on Nasdaq actually yesterday. From about 20,500, it dropped down to 20,200. Now it's staying there within a range. So I'm not too certain what happens with the Nasdaq right now, but after hours tomorrow, or after hours, that's after the US session, we should see something happening there for the Nasdaq. Possibly we move towards 20,300, but the ideal is that we are going to stay in a range here before we break to the upside. Guys, I need to mention that I'm bullish on the Nasdaq. Okay, uh, simply because the companies that I'm expecting to beat on earnings are going to be big contributors to Nasdaq's move to the upside. You're looking at companies like Apple. We have a few other companies like Meta that are most likely going to, the big names as we know them, the Mag 7. Most of those are going to beat on earnings. So I believe that's going to definitely propel the Nasdaq to the new level. So it's going to stay in that range there, but you should possibly see a move to the upside. All right. Next question. Which values are you using for the Fibonacci? For the Fibonacci, I typically use 0% to 100%. So 0%, 23.6%, 50%, the 61.8%, and then of course the 100%. And I usually put them on the peak and the trough. Yeah, have the peak at the trough. So I'll put at the most recent swing low and then the most recent swing high. Yeah. Yeah, yesterday we had the Canada CPI, guys. However, the CPI sort of like caused a bit of confusion for USD CAD. So of course we first saw an initial spike to the upside, and after spiking up there, then of course now we saw it reversing now to trade towards this range here. Yeah, so for now, I'm just really watching and waiting to see what happens there. We are stuck in a range, so we need to wait for a break of deadlock there for us to trade upwards of 1.38 or for us to trade lower. Yeah. Um, I don't want to really get into the Canadian dollar, guys. I'll just refer you to the market FX Spaces market snapshot that we did on Friday last week. So just go and watch our snapshot. You'll be able to see what we talked about regarding the Canadian dollar. Huh? Yeah. But for now, we need to break deadlock. So either we break here to move up or we break here to move down. The likely scenario is that we move higher, since of course the trend is looking relatively bullish, as you can see. Yeah, but for the other factors, because it will take time to explain, let's you can just watch the snapshot we did on Friday where we handled anything that was the Canada related. Yeah. Next question. Yeah, so for the Nasdaq, of course, I would say not only you, Joseph. I think most, if you're looking at positioning, it's hard to be bearish on tech. Let's be honest. It's hard to be bearish on tech. Okay, where the world is going, things are advancing, and it's very likely that Nasdaq is going to test higher levels. Of course, with pullbacks here and there. Looking at it from a technical perspective, of course, Nasdaq is looking bullish. Right now, from our recent swing low we had in September, we are now on a very strong uptrend. Yeah, so it will since we are now in the earnings season, it's now going to be in the hands of the companies how they perform. We need to wait for the earnings calls to see how the companies have done. We have a number of companies releasing earnings, and of course, most of these companies are going to affect where the Nasdaq moves. Yeah. Talking about how the Nasdaq does pre-election based on the previous election cycle we got for 2021, rather 2020, we saw a peak for the Nasdaq around this time actually, before the Nasdaq sold. Okay, so I don't know whether the same thing might happen now, but if history repeats itself, Nasdaq has actually peaked. If I'm talking about 2020, if you look at it from 2020, so maybe I can just share my chart quickly here, so that maybe we can have a look at what I'm talking about. So if you go and check on the Nasdaq, let me just share my screen here. If you look at the Nasdaq and how it performed in 2020, you'll notice that in 2020, when we had the last US election, the Nasdaq peaked around it peaked around here. Okay, you'll be seeing my chart. Okay, the chart is there. I think you guys can be able to see it. So this is how the Nasdaq did. So before the election, the peak it had was a peak of it peaked at around 12,181. Okay, this was on the 13th of October. Okay, now the other thing, of course, that doesn't make 2020 as perfect as 2024 is that we had a pandemic. So again, they usually say that how the markets have done in the past does not indicate how they will do in the future. But now the only thing is that we had the pandemic in 2020, so that makes it a bit complex when it comes to how it will perform, because it's not an exact replica of the year we are in. We don't have a pandemic in 2024, so could be maybe this selling momentum was because of COVID. Okay, I don't know. So that's a thing that makes it hard. But if we are to look at it in terms of being election years, the Nasdaq actually peaked around here. Okay, then it sold back down. That was a pullback of about 10%, right? And then after the election, actually before the election, that was on the 2nd of November, the Nasdaq launched a rally, okay, that took it all the way into a new cycle, a new bull cycle that took it all the way up here. So by Feb, the Nasdaq was at 13,000 from about 10,000. So it gained about 3,000 points. Okay. Yeah. So that's the thing. So where we are at the moment, Nasdaq would sell. Okay. Despite what we get with the earnings. Yeah. So let's just keep watch and see what happens. Patrick, you bring up USD card. I actually discussed USD card yesterday with a few clients, and we're also looking at it, of course, looking at how we did in the election cycle. Same thing with USD card. There was also a bit of a sell uh, before the election, and then actually, there was a sell before the election that intensified into the new year. Okay, so that was USD card. So USD card, we had pre-election peak. That was on the 29th of October. Okay, which I would say is next week, but on Tuesday. And then after that, we saw a sell. Okay, we saw a sell for it. Post-election, 11th of November, that's after the election. And then from that point, from the peak up to March, the USD card collapsed by about 7%. Okay. Yeah. So yeah, so I would say maybe USD card, we need to start aiming for potential sales. Possibly, if you are a swing trader, you need to, this might be the time where you need to start deciding. Like, you need to do your risk management, organize what you're risking, what you're aiming to risk for your trade. Then you can see how to take that trade. But if comparing to where we're at the moment, USD card may experience about a 7% drop by say around March next year. Yeah, so that's how things are looking like. So Patrick, I think I've been able to cover uh your question on the 2020 election. All right. So guys, I think that's it for today. Thank you so much for joining me today for today's market snapshot. For more information about what's FX Space is up to at the moment, check the description below and you'll be able to get the information that you need. Yeah, that's it from me, guys. I'm wishing you all a happy trading day today, and cheers, guys.